Okay, now step 3, project operating assets and liabilities. So operating assets and liabilities are relevant to the operating activities. Okay, these are examples of operating assets and liabilities. Now we forecast each of them. Okay, the first one is cash and cash equivalent. Okay, so we can see from 2014 to 2016, the company's cash balance in 2015 increased a lot, right? Increased from 13,800 to 21,100. That's a huge increase. A little bit decrease, 3% next year. So usually when we forecast the assets cash balance, we use the cash turnover ratio. So actually, to determine the ending balance of cash, so we just apply this formula. Y is the forecast revenue divided by 365. So here, this means the forecast revenue per day, or daily forecast revenue. The next one is days sales held in cash, and this is available in the analysis tab. Okay, let's take a look at. Actually, the cash balance is a product of daily forecast sales or revenue and the days sales held in cash. Okay, the analysis tab. Okay, so we already calculate several turnovers. Right. The last one here, this row is assets turnover, and this row is number of days sales held in cash. Okay, so in 2016, the cash sales held in cash is about 35 days. Okay, so we just keep using 35 days for our forecast. Okay, so we need to modify the numbers here a little bit. Okay, so we change the percentage. Okay, so it will be 35. Okay, so first let me change the percentage to numbers format. Oops. Change the percentage to number. Okay, then we'll enter 35. That's sales held in cash, number of days sales held in cash, right? So then the cash balance, we know it is the product of daily sales, right? So what's the daily forecast sales? So daily forecast sales is the forecast sales. Forecast sales is a forecast revenue of year plus 1, right? And divided by 365. So that's a forecast daily sale, and multiple what? Yeah, sales held in cash, number of days sales held in cash. Okay, so now this is a formula, right? So this one is a daily forecast revenue, and this is number of days held in cash, sales held in cash. So we just enter. Okay, then we drag. So that means we apply the formula to the rest of the 4 years. Okay, so from year plus 1 to years plus 5, this is forecast cash balance for Apple. Okay, so the next one is marketable security. So marketable security, we know it is kind of short-term investments, right? Because company can make a little bit interest from this investment, but the purpose of this investment is for the liquidity purpose or operating. So that's why we classified it as operating assets. So for the marketable security, we can project by analyzing the common size and the growth rate. Right? So you will find there's a huge growth rate in recent years. 82% increase from 14 to 15, 128 from 15 to 16. The reason Apple, invest in a lot, or invest a lot in the marketable security, because this is an interest-bearing investment, right? So it can create some short-term interest revenue for Apple. Because this is a increasing trend and very large increase. So for me, I just expect the company will increase their marketable security by 20% each year. So I enter 20%. So the next year is actually 2016 multiple 1 plus the growth rate. Okay, so at every year increase by 20%. Okay, that's reasonable because Apple is a company maintain large amount of cash, right? So now Apple actually invest part of their cash in the liquid assets like marketable security, because we know cash is cash, won't generate any returns, right? But marketable security can generate returns for companies. Okay, so this actually is based on the analysis of the trend growth rate. Okay, I'm conservative, so I use 20% rather than the huge increase. Okay, so the next one is accounts and notes receivable. We know these are generated from sales, right? So to forecast account receivable, what we do is we use the formula. Okay, the second formula. The ending balance of account receivable equals to daily sales or daily forecast sales. Okay, this same as the formula in the cash forecast. Okay, the next one is days accounts receivable held. Okay, so the account receivable is actually the product of daily sales and the number of days, right? So same as cash, so we can find account receivable, right? So the account receivable days held is 28 days in 2016, okay? And there is an increase trend, and so I personally just expect 29 days. Okay, 29 days, or you can keep using 28. It doesn't matter much. Okay, so I enter 20. First, I change the percentage to a number. Then I enter 29. The next is change the formula here. The first is the brackets, okay, and we know the forecast revenue is E. Let's just move up. That's the revenue, right? And divided by 365. That's the daily sale, and multiple number of days. Accounts receivable held. So here, okay. So when we enter, okay, this because we only enter the new formula in this cell. We should drag, then the formula applies to the rest of cells. Okay, all of them just equals to the daily sales of that year multiple the number of days. Okay, so this is a forecast accounts receivable. So the method is just the same as the cash and the cash equivalent forecast. the next one is inventory. Again, we also use the formula. Okay, so the third formula, to forecast the inventory, we just need the daily cost of goods sold multiple number of days. Okay, so number of days inventory, well, it's pretty fast, right? A week, actually 6 days. And 6 days was maintained for the past 3 years, so we keep using 6 days. So almost just in time, right? So that means Apple actually, because Apple does not produce iPhone, right? It just design. iPhone mostly are made in China, Vietnam, and India. So this factory will ship the cell phone or the other electronics to the customer directly. So Apple does not incur very high inventory expense. Okay, so we have number of days 6, and also again we change the format to number then 6. Okay, next is to change the formula. But this time the difference is we should enter the cost of goods sold, right? Cost of goods sold, and divided by 365. That's daily cost of goods sold, and the multiple number of days, actually 6. But here is one issue, because cost of goods sold is a negative number, right? Because cost of goods sold is an expense. So we should use a negative sign to change the sign, because inventory is now negative. So just click enter, right? So we have balance for cost inventory. Then don't forget to drag, okay, otherwise you have mistakes. Okay, so that's the inventory balance for Apple. Okay, next, prepaid expense 0, so we do not do anything. Deferred tax assets, nothing. Oh, here's 1, but the 0 for the 15 and 16, so we don't forecast them. Okay, we just assume the Apple keep maintain or keep 0 for this account in the future. Okay, so the next one is vendor non-trade receivables, and so this is the receivable not from from the sales. Okay, and it is operating assets, and we have you can use common size analysis, right? So about 4.2 to 4.6% of the total. Well, currently you cannot use common size analysis because we haven't got the total assets yet. What I do is I just assume this shares the same growth rate as the revenue. Okay, if the company has greater revenue, usually the company will have greater non-trade receivables. So I just copy the growth rate and paste here. I just paste numbers, or you can paste the original format. It doesn't matter. Okay, so that's the forecast vendor non-trade receivables. Other current assets, we have no clue what's the definition of other current assets. We simply assume it is share the same growth rate as revenue. Okay, next is property, plant, equipment, and its contra account accumulated depreciation. And this part, I have different video to introduce the forecast of these two accounts. Okay, actually it is complete in this section. Okay. Okay, so next is amortizable intangible assets. Okay, and for this part, for common size is about 1.8 to 1. So here is a decreasing trend, right? So the balance of intangible assets or amortizable intangible assets keep decreasing. And what I did is just use average decreasing rate. It is about 12%. Okay, so 12%. Don't forget, it is a negative decrease, right? So decrease, it is negative. Okay, so that's the forecast of amortizable intangible assets. Okay, the next, goodwill. So the goodwill is unamortizable intangible assets, non-amortizable intangible assets. And usually we just assume the goodwill have the same growth rate as revenue, because if the company has higher sales, that means the company have greater value, right? So higher goodwill. So again, you just copy the growth rate and paste. Okay, so that's forecast of goodwill. Other non-amortizable intangible assets, 0, so 0. The next one is long-term marketable security. So this is a type of long-term assets, okay, investments. And what we do is we simply assume the company, this part shares the same growth rate with the revenue. Okay, paste. And also on other non-current assets, we use a growth rate of revenue. Okay, so it is pretty simple. Okay, that's the general rules to forecast these accounts. Okay, so these are all operating assets. So the next one is operating liabilities. So the first one is accounts payable. Okay, to forecast the accounts payable, we still use, the number of days account receivable held. So we can take a look at the formula. Okay, but here we do not see the balance of accounts receivable is a product of number of days multiple purchase per day, but we don't have the purchase available from the accounting information, but we have this formula, right? Inventory purchase equals to the cost of goods sold plus ending inventory subtract beginning inventory. Right, so the cost of goods sold is available. Balance of inventory we just forecast, right? So we can calculate the inventory purchase and divided by 365, we got purchase per day. Also, number of days held is available in the analysis tab. Okay, so actually it's here. Okay, so it is about 101 days. 101 days. But comparing with the prior 2 years 85, 85, 101. Actually, that's a good thing, good news. It actually is good for Apple, right? Because it's a type of financing from the suppliers. So the bigger days, the better. So that means Apple can delay the payment to their suppliers. So I assume there's a number between, like for example, 90. Okay. For you, you can change a little bit. 93, 88, 89. It doesn't matter much. Okay. So next is we change the format from percentage to numbers and enter 90. Okay. So next is we enter the formula. Okay, enter the formula for accounts payable. The formula is cost of goods sold. Suppose I delete all these. Cost of goods sold. We cost of goods sold, and because cost of goods sold is negative number, right? So we should change it to positive. It's a negative sign. Then we add the ending inventory. So ending inventory is let's drag to the current assets. Ending inventory is this one. We subtract what? Beginning inventory. Right? And this number should be divided by 365, so we get the purchase per day. Right? And then we multiple the number of days. Right? Okay. So let me enter. Okay, don't forget to drag. So apply the formula to the rest of the columns. Okay. So this is the forecast of accounts receivable. Okay. And the next one, current accrued expense. So current accrued expense, this is also associated with operating, or actually revenue. We simply copy the growth rate of revenue here. So that's the forecast of current accrued expenses. Okay. And the note, this is liabilities, right? So this is financial liabilities, so we don't touch them now. Let's just move down. Okay, this is also financial liabilities. Deferred tax liabilities. Okay, this is operating liability, but there's nothing, zero, right? All zero, so we don't change. Income tax payable, zero, so keep using zero. And deferred revenue. Okay, deferred revenue also called unearned revenue, right? So we know it is just share the growth rate of revenue, because usually if you have higher sales, you also have higher unearned revenues. Okay, other current liabilities, so there is no zero or prior years, so we keep using the zero. Okay, so that's all about the forecast of operating assets and liabilities.